I'll run through the presentation. Tim will jump in with color as we go. And if somebody has a question, use the throw your hand up option within Zoom.
Perfect.
So one clarification I will make is that the name under which the program is broked or is Alternative Risk Services, which is a subsidiary of 3303128 Canada Inc., which is the super sexy name that our company officially has. It's the brokerage arm of our company, and Axima is the consulting arm, but they are one and the same. So I'm going to share my screen here. I'm going to pick screen one, and let's hope that worked. Did everybody get that?
Awesome.
Okay, great. All right. So first of all, I had this epiphany this morning, and this is not a canned joke. My canned joke is I used to look like Tom Hanks at the beginning of Castaway, and now I look like Tom Hanks just before the end of Castaway. But then I had a moment this morning where I realized COVID-19 has been a lot like Castaway in general. We're all super excited to open FedEx packages. We talk to inanimate objects through Zoom, and our cars have very few kilometers on them at the end of the whole thing. So that was my epiphany from this morning. I'm not saying it's great, but it's what I got. So let's walk through this presentation here. Super happy that Tim could join us. He's General Claims Counsel. He actually is sort of the guy that handles the most thorny of claims. So if there's a coverage decision or something like that that needs to be made, it will usually land on Tim's desk. So you are talking to the authority here. I am the CIO and principal broker of Alternative Risk Services, but you can think of me as the program manager for the insurance program. It is not Reco, so we are a totally separate organization, and Reco has contracted us to manage the program. We do this kind of program. We're not a traditional insurance brokerage, so if you have home and auto questions, I can't really help you beyond my general knowledge. As an insurance broker, we don't sell that. We just do professional liability primarily. We do other wacky stuff, but what you'll have here is the opportunity to ask questions in an open environment, which doesn't get back to Reco because your name is not shared with Reco on E&O claims unless you call Reco and say you want them to look into a file, in which case it will land on my desk as the person who's going to advocate for you for a claim on that kind of stuff. And any service related or coverage type questions will circle through me or my brokerage team. And then Tim works on the claim side. And this is a rare opportunity to access Tim directly because he's on the claim side, and we have a fairly strong wall between the claims and the brokerage side. So that's a big, long preamble, but there it is. The disclaimers here in the presentation, hopefully, is that coming up on your screen?
Yep.
Perfect. Okay, so this is just to sort of say that we're going to talk about claim circumstances, but at the end of the day, if a claim comes up, it's going to be judged based on A, the policy wording, the terms and conditions, the full bore of the policy, and B, the actual fact circumstances of the claim when it comes in, because every claim is just a little bit different, but we can talk in broad general terms here. So if you have questions about specific circumstance, we'd be happy to try and field it. The Reco policy is actually a single policy. So there's actually a single document that's about 27 pages long, including all the attachments and so on. And Reco has a copy of it. It is one policy that covers every realtor in Ontario registered with Reco. I don't know if there's some rogue people that aren't part of Reco. I don't think they're supposed to be. It's illegal. But anyways, so it's one single policy document. It has three different parts: errors and omissions, which is the one most people think of, but it also has consumer deposit coverage, which in other provinces isn't covered by insurance. It's usually some form of indemnification fund run by the regulator. And having it insurance is actually a really nice feature of the Reco policy, and we'll talk about that again in a few minutes. And commission protection, which again is absolutely unique to Reco. No other provinces in Canada have commission protection, and as far as I know, I've never heard of it being offered anywhere in North America, and I haven't really scoured beyond North America, but that is a unique coverage to Reco, so we'll talk about that too. The Reco policy is set up as a master and certificate policy. So when you pay your premiums to Reco, they will issue you, as the administrator of the policy, they'll issue you a certificate. So what you get is not necessarily a copy of the full policy, although they have sent it up in the past. You can download copies of the policy on your MyWeb, on Reco's website, or you can go to our website at reco-claims.ca, and you can download not only this year's policy, but the old policies, and you can see the coverage changes over time in a high-level view there too. But you're going to attach as a certificate holder onto the one policy. And for that reason, it's very efficient, this policy. It makes it cheaper because we don't have to sell individual policies to everybody. You're not trying to arrange for your own insurance as is the case in other industries, like, for example, home inspectors would go out and they'd have to get their own policy if they wanted coverage. So it's highly efficient, but that means it can't be customized. So if you're doing some other professional activities like mortgage broking or property management, that's a separate policy. I have that question quite a bit where people say, I've started doing this. Can you endorse my policy for this new activity? It's really dedicated just to this one activity, so it can't be customized, and you can't change the limits. You can buy a policy that sits above it if you want. You can't buy more commission protection. Sometimes we get that question. You can't buy more of that. It is what it is, and it's arranged by Reco, and it has changed many times over the years to try and expand and improve upon the coverage. So who's who? There's actually a lot of people involved in the administration of this single policy. It's one of the largest policies in Canada, so I'm told by Lloyd's. The insureds is you guys. So brokers, salespersons, and brokerages. You guys make up the insured population under the policy. Brokers and salespersons pay into the policy. They pay a premium. Brokerages get coverage through the professionals that they engage to do the work. So brokerages don't pay a premium, but they get covered as part of the policy. The named insured is Reco, so it's actually Reco on the policy. And sometimes, Tim, sometimes we get bright light lawyers that decide they're going to include Reco in their claims against individuals. And so Reco can actually trigger coverage, and usually Tim is involved with shooing away people who think it's a great idea to name the regulator. Third is the insurers, and please say this year is like last year. We've actually added a second insurer on the face of it. So it used to be just Lloyd's of London that was the insurer, or at least that's what the policy said. And then last year we switched to Lloyd's and Trisura Guarantee Company. Trisura is a Canadian domiciled company. Lloyd's is based in London. And one thing you might not know is that Lloyd's is actually a marketplace of insurers. I think there are about 150 to 200 insurers at Lloyd's. And when you go to Lloyd's, you actually negotiate with multiple syndicates in programs of this size. And if you're curious what the number is, it's 12. We have 12 Lloyd's syndicates, so insurers behind the Lloyd's name that are involved in the program and insure it. And then plus Trisura makes 13. So I threw up my picture of London because we used to, back pre-COVID, used to actually go there in person. Actually, London is a very old school business environment where handshakes are still the order of the day, and personal relationships matter a lot. And that's actually paid big dividends in the program over time. But we also have a really good relationship with Trisura. So it's tough negotiations, but typically we get really great coverage and we get the enhancements that we want. The program manager is us, Alternative Risk Services. So Tim and the claims team are within our office, and they're file handlers. And then there's the broking team and the sort of management, accounting, and all those other pieces that are actually downloaded by Lloyd's so that we can handle claims in Canada with rapid response. And we have the authority to settle claims on their behalf up to a certain threshold. So that program manager role is really important for making sure that everything is quick turnaround for you. And then the adjuster is Claims Pro. So if you've ever filed a claim, you actually don't send it to us and you don't send it to Reco, you send it to Claims Pro. And Claims Pro has a great staff there. Jan Perkins, Kathy Blanford, and a number of other adjusters. Jan has been working on the program for what, Tim, 21 years, I think?
Yeah, longer than me.
Yeah, long time, and she's very, very experienced and a real asset. So if you ever have claims that you need to submit, they'll land on Jan or Kathy's desk or Lori's, and they can help walk you through some thorny situations if you need some assistance. But they'll direct traffic, they'll assign defense counsel with our assistance. So sometimes we step in and say, we want it to go to this lawyer because they're really good at foundation claims, or this lawyer because they're great at farm claims, or whatever the case might be. We have a large panel of defense counsel of lawyers that we use for the program. So any questions on who's who? I should have called it the Hinterlands Who's Who for those who remember those features on TV. So let's talk about the errors and omissions coverage and what it covers. It covers you for mistakes. So if you get a clause in the APS, maybe you make a mistake on the taxes. Is taxes in? Is taxes out? You might be using the wrong form. You might make a mistake like undervaluing a property, not picking up on, say, a key comparable, or overvaluing a property and not getting it sold fast enough for the client, whatever the case might be, incorrect representations, square footage issues, for example. Anything you can think of that's a mistake in your professional services, that's what it's intended to cover. And I'm giving a big broad net because it actually covers a lot of things. I had somebody say, what things does the policy cover? I don't see that in the policy. And it really just says it covers you for errors or omissions in the provision of professional services. And there's a very wide definition of professional services. Or Tim, you want to field this one, the none of the above?
Yeah, I was going to jump in there because that's one of the things is that you may not have made a mistake at all. Just somebody says you have. And what I always tell my insureds is that I can't stop somebody from suing you. All I can do is defend you. But if somebody issues a statement of claim and says that you did something in your professional capacity, that will trigger our defense obligation, and we'll put counsel on it to defend the action. It's merely the accusation. Because somebody sues you doesn't mean you did something wrong. And we do frequently close claims without paying anything on them. And we have taken things successfully to trial and so forth.
So it's all about whether you actually made a mistake that caused somebody damages or harm, right, Tim?
Yeah.
Yeah. So if they can quantify that they lost X dollars as a result of your mistake, and they can prove it was your fault, then the policy will pay out for the damages that get assessed against you. But in many cases, the professional hasn't made a mistake or hasn't caused any damages. Somebody might think they overpaid for a property, but if you can successfully prove that they actually got a great deal or they got at least market value, did they lose anything by buying that property? So it's really sort of a technical process to figure out whether or not there's liability, whether you really made a mistake, and whether it caused any damages as a result. And this is
everybody here has probably heard complaints from clients at some point or other. So think of all the possible complaints that you've heard, and that's what will show up in a statement of claim at times.
And let me just really distinguish this from the complaints process. So we don't get involved in the Reco complaints process. It's a completely different process, separate and apart. This is, the court system, and Reco does ethical complaints, that kind of stuff, code of conduct type complaints, and they do their own thing, and they're totally separate processes. And we don't inform the complaints process, although sometimes you'll find your clients, if they're going to sue you, will try and use the complaints process to gain leverage. It shouldn't, but sometimes they'll try that on for size anyways.
And we don't tell Reco anything about claims other than statistically.
Exactly, just broad statistics, because they do want to monitor what kind of coverages you need, what kinds of claims they're getting. You'll see in the Reco financial annual report of a couple of years ago, there were the annual report stats on the insurance program that talked about what kinds of claims were the most common by urban and rural and commercial and so on. They pulled it out last year for some reason, and I think it's going to be put back in again this year. But if you're ever looking for those stats, the latest stats are on our website under the documents tab. Anyways, let's talk about how much coverage you have. You have up to $1 million per claim, and a maximum of $3 million per year. Now, here's an interesting fact about the Reco policy. Unlike most other policies sold in Ontario, that $1 million is exclusive of legal costs. So it's just for damages paid. So you have unlimited, under the policy, unlimited legal expense coverage for defending your claim. So if we spend $750,000 defending a claim, and I'm not going to say that happens very often, but it has happened at least once, there's still a full $1 million available to pay for the damages that if they end up being assessed against you. And if you have a really bad year, you could have 3 of those in a given year. So you could have $3 million claims in a given year, and all 3 of them would be covered up to $3 million. You could also have 6 $500,000 claims. You can slice it up and be terrible however you like. That's supposed to be a joke. The deductible is $2,500. And here again, there's a bit of a nuance. The deductible is only applicable to damages. So if we just defend a fine and it's ultimately proven you did nothing wrong or caused no damages, you will pay no deductible. So just reporting a claim doesn't mean you're going to be on the hook to pay a deductible. Unless it goes through the process and ultimately we have to pay damages on your behalf, you will not pay a deductible. If you do, it will be $2,500 and you'll be responsible for that piece. And it will increase by $2,500 for each additional claim you make within a 3-year period. So let's pause for a second. One of the questions we had at the annual general meeting last couple weeks ago, I guess, last week and a half ago. Time is blurring, isn't it? One of the questions we had is how come everybody pays the same for the insurance program? Shouldn't people who use the insurance program more have to pay more for it? And the deductible is where we do that. So if you have lots of claims, you're going to pay an awful lot more money because you're going to be paying these increased deductibles. If you have 3 claims in a given year, you're going to end up paying $7,500 for that last deductible. And the deductible is actually an insurance amount owing under REBA 2002. So if you don't pay your deductible, your registration will be suspended until you do. So it's just like the insurance premium. So nobody's getting away with not paying their deductibles. Coverage extends to the brokerage. So Century 21 would get access to the same limit. But it's ultimately sort of coverage through you. In some rare cases, the brokerage is defended all on its own. So that's, any questions? We're going to talk about it a little bit more. And of course, we're going to open up the floor for questions at the end. But if anybody has any questions, by all means, please ask in the midst of the presentation. So let's talk about the errors and omissions claims process. Just before you say it, I know that my chart goes off the bottom of the page. I'm aware, because I made it super snazzy. Look at that. It's animated. How cool is that? I thought it was neat when I did it, but Aaron thought it was cool. But,
I'm smiling.
Okay. So let's talk about how the claims process evolves. So right up here at the beginning, something happens that gives rise to a claim. As Tim said, a client could just complain. They could just say, you know what, that didn't go to my satisfaction. If you think that might give rise to a claim down the road, actually, we would recommend you report it. There's no harm in reporting. You're not going to pay a deductible unless it goes somewhere. And you put the insurer on notice that something has come up, and you guarantee that you're not offside of not telling the insurer early in the process. Tim,
Yeah.
do you want to answer that?
Yeah. When in doubt, report, because as Ryan says, it doesn't affect your deductible. It doesn't affect your premiums. We don't share information with Reco. It's just under the policy, you have a duty to report when you become aware of circumstances. So the way to make sure that you always do it is to always do it. If you think it might be a problem, just out of what we call an abundance of caution, report. The adjusters they may say, okay, well, we'll open a file and we'll disclose it again. And if anything ever comes of it, fine. And if not, we've got a closed file.
Could I just jump in here for a minute? Hi, Ryan and Tim. I'm Isabel Sardison. I'm the broker of record here.
Hi, Isabel.
And fabulous information so far. I deal with Jen and Kathy and Liz Bianchi all the time. And let me just emphasize to the agents who are on the call that they need to let their manager or me know immediately when they're considering something is going to be a problem. If we have to file a claim, anything like that, it has to go through management and me so that we're aware of what's going on and make sure the process is done correctly. And so that we're all on the same page. So that's all I have to say.
Isabel made a great point on the claims form for errors and omissions claims. There's actually two sides. One side is, or two sections. One side is you and one side is for the broker of record. So that's actually baked right into the form for submitting a claim, and that's how you submit a claim. So you submit it through a paper form that gets completed and submitted to Claims Pro, and all that information is on the form. You can get it through your MyWeb. You can get it probably from Isabel. Or you can get it on our website, reco-claims.ca. So let's just carry on with this process, this claims process. So you report a claim, and oftentimes nothing comes of it. And let me just say, about, as Tim said, lots of claims don't end up paying damages. That's about 85% of claims don't pay damages. Many claims, about 50%, they're reported out of an abundance of caution, and they don't go anywhere. And so that might be the end of that claim process. If it carries on and it becomes an official claim in the sort of Ontario courts sense, you'll get a statement of claim, which is an official court document that has a stamp on it. Tim, do they still have stamps? I guess they're stamps.
Yeah, they do. They still have seals. Now they're electronic seals. Now, normally when we do these things live, I'd ask for a show of hands who've seen a statement of claim, but I can't do that here. But you'll know when you see
show of hands how many people have read the policy, and it's my number's all the way up to 2 now. I've had 2 people say they've read the policy.
It's an official looking document, and I guess the one thing I'll say at this point is we say don't panic, which is very good advice, but also don't wait. These aren't things that I'll deal with that in a week or 2. No, you should let us know right away, because there are potentially time constraints, and depending on who we're dealing with and how unreasonable they are, that the sooner we get on something, the better.
Right. Isn't it typically 30 days to respond to file?
Technically, under the rules, you've got 20 days. You can buy another 10 days by filing a particular form called a notice of intent to defend. But in reality, if you've got lawyers who know what they're doing and they know an insurer is involved, nobody insists on those kind of strict timelines. One of the problems you can have is you can have people who are representing themselves, and they don't know the law and they don't know how this works, and they think they're just going to be hard-nosed right out of the blocks. So the sooner we get on one of those, the better. It's not that we can't manage it. It's just that sooner rather than later is best.
So you're going to send that statement of claim form to the program, the statement of claim and your claim form to the program. The adjuster is going to have a look at it, and they're going to acknowledge that they got it. And depending on the matter, they may assign counsel. Sometimes it's cut and dry. They can go straight to a sort of a settlement process. There's no point in putting people through the ringer when it's very clear cut. Or if it's a smaller amount, so smaller, sort of small claims court types things, we might not assign a lawyer. In most cases, anything that's got a statement of a claim will have a lawyer assigned to it. So you'll be assigned a lawyer, and that be your lawyer for the claims process. There's also the potential that your claim might be denied. And we're going to cover denial criteria in a couple of slides. But if that's the case, you might have to seek out your own representation. So or handle the matter yourself. But in rare circumstances, your claim would be denied, in which case the insurance program is not involved. Denials are very rare. So if you are covered by the program, one thing I want to state is that the claims process is very slow. The courts process is very slow. It takes a long time to get meetings set. And a lot of people feel like they should be done and dusted in a matter of weeks. But the truth is that we have claims that are open for a decade or longer. We still have files open from 2009. So that process can be, depending on the matter, very, very lengthy.
And it depends on the jurisdiction in which the action started. And obviously, COVID hasn't helped in a lot of ways because there's been a backlog as a result of the courts figuring out how to work technology.
Great point, Tim. And then sometimes the other side just loses interest and wanders off. And if that's the case, then we might let it sit for a while. And then when it seems clear nobody's going to respond, then we might just quietly shut down the file or ask the court to throw it out. Is that the right terminology, Tim?
Yeah, pretty well. In some cases, as a matter of fact, I gave instructions just this morning that we're just going to let sleeping dogs lie. And depending on the jurisdiction, like here in Toronto, the court will, after 5 years, do what they call as an administrative dismissal. The courts in Ottawa do that as well. Not everywhere does.
So the other two circumstances or resolutions for it is you might have your claims settled. Some people think that everything goes to court. I'm sure you guys don't, but some people do, and that's just simply not the case. I think, Tim, you said once it was 1 or 2% of files actually go to court.
Yeah, 98% of all actions started never see a trial.
Right. So often it'll go to settlement, and that's actually in some ways in your best interest as well, because if it goes to trial and it doesn't go your way, that's now public information. So if somebody goes to Google your name, they'll find the court decision and they can read all about the details. So settlements are great for two things. One, typically they're mediated or reasonable in nature, and you come to a conclusion that everybody can live with, and everybody just settles it out without having to involve the courts. But if it does have to go to court, and sometimes they do, then it will be a very time-consuming process of showing up to court and sitting there. Tim, you want to describe that for everybody, what that's kind of like?
Yeah, probably the worst thing for insurers, other than just the stress of it, is the time investment that being sued has. So you'll be required at certain times to attend, like if it goes to what we call examinations for discovery, that means you'll spend time with your defense counsel preparing for that, and then you'll spend a day or 2 or 3, depending on the nature of the thing, answering questions that are put to you by the lawyers on the other side, which are all recorded by the court reporter. And then there's various other stages, like we may have a mediation. Some jurisdictions it's mandatory, others it's voluntary. There may be court appearances like pretrials and so forth. And because you're a party to the action, the court expects you to be there. And if it gets to trial, then you need to be there the entire time.
Just to be clear, the insurance program does not pay for your time while you're in court. It pays for your lawyer's time.
Like I say, other than the stress, that's probably the worst part for
Exactly.
all insureds.
Because you're missing out on just doing what you do best, which is selling real estate. So those are the two ways that files can resolve. And in that case, if you go through a settlement process or you go to court, depending on how things go, that's the situation where you probably end up paying a deductible. So you'll really have to get far down the line before a deductible is invoked. And then those things will come to an end and your file will be closed and done. So that's the claims process for E&O. So let's talk about those denial criteria, the things that are not covered, the exclusions under the policy. First of all, we don't cover fraud. So if you're a criminal, we won't cover you. So if you just do criminal activities, the policy is not there to cover you for your criminal activities and defend you for that. In some cases, if somebody is fraudulent, the policy will cover other parties involved, like the brokerage, for example, but it won't cover criminal activity. It has to be an honest mistake. Bodily injury. So this is one thing I wanted to touch on is bodily injury and property damage. These two are technically excluded, and then coverage is what's called carved back into the policies, and they cover up to 100,000. This limit has been slowly increasing as we see general liability carriers more and more try and get out of managing claims on the basis that it was professional in nature. And so we've included coverage. We don't frequently pay bodily injury or property damage claims. They're typically covered under a general liability policy, but you do have some coverage in here. Again, this is unique in the country. None of the other jurisdictions cover bodily injury and property damage. One caveat being that Quebec's policy doesn't say anything about bodily injury, so technically it could cover it, but because it doesn't explicitly exclude it, but everybody else doesn't cover it. Appraisals for the purposes of financing. So let me be clear on that. We do cover appraisals, but not for the purposes of financing. So if you have to do an appraisal for, say somebody who's splitting up with their spouse, or for estate purposes, if you want to write a statement of value or something for somebody who needs it for any number of purposes, that's fine, as long as it's not for financing purposes. So that's a clear distinction. Commissions disputes and deposit disputes. So commission disputes, we don't cover commissions disputes or claims arising out of commissions disputes. So if your client doesn't pay your commission and you pursue them in court, and then as a result they countersue you, we won't cover that. So if it gets down to some issue with commissions, and we've had agents call and they ask us, am I covered if I want to sue somebody? We won't cover your cost to go after somebody else. And we will tell you that if they turn around and they get nasty and they sue you right back, there's a possibility won't cover you for circumstances where they sue you back. That said, if they sue you back and it seems clear to the program that they would have anyways, despite in spite of the commission's dispute, then we will probably afford at least some coverage for the counterclaim. Deposit disputes, typically it's the brokerage that gets involved in this because they're the ones holding the deposit. Pleased to say that one of the coverage enhancements this year is that exclusion is going to be removed starting September 1st. So we will be covering that, but previously we didn't cover deposit disputes because they were traditionally, in the most typical sense, they would be just administrative. The brokerage is stuck in the middle. There's a buyer who thinks it should be theirs. There's a seller who thinks it should be theirs. And the brokerage is stuck in the middle because they need a release from both parties to send the money one direction or the other. And there's a process for putting it into court. And now the program's going to be covering that. Fines, penalties, and taxes. I've had calls, people asking if we cover can spam issues or parking tickets and things like that. We don't cover any of those things. Those fines and penalties and taxes and so on, those are all levied to discourage bad behavior. And if we insured them, that wouldn't be particularly good of us for doing. So we don't cover that. Also, if we covered can spam and we covered all fines relating to spamming people, then why wouldn't everybody just spam everybody because the insurance pay for the fine? So I've had that discussion with a few agents in the past. We don't cover mortgage brokering. We don't cover property management. And this is a strange nuance in the policy wording where it represents more than 35% of gross revenue of the individual or the firm. And that seems strange, but what it's really trying to say is we don't cover property managers. We cover property management as it relates to, transacting real estate in the province of Ontario. We know there are aspects of doing your job that look and feel a lot like property management, but we don't cover property managers, who are doing it full time or where it's their, one of their core business functions.
Yeah. It's more incidental to your practice as a real estate agent or broker. If you get into doing more of that, then you're really a property manager now, and you should get your own insurance for that.
Yeah. So sometimes people call me and they ask, hey, I have a few clients, they're snowbirds, and they've asked me if I can do property management for them during the winter while they're south and rent out their place. And I will always tell them, don't do that. It's dabbling. The insurers won't insure you, like if you go to get a policy, because you're a dabbler, you're not a dedicated property manager, and it's simply not worth the risk because, and I'll point you back to bodily injury and property damage, there's limited coverage there, and that's really the kind of coverage that a property manager needs. They need coverage for bodily injury. If you don't clear the snow in time and somebody slips and falls on a property that you bring responsible for managing, you need that full sort of $1 million or $2 million of bodily injury coverage. And property damage. If you fail to, pay the hydro bill in time and the heat turns off and the pipes burst, you'll want to have a lot more than $100,000 if you're doing property management. So that's a case where if you're going to do it, but don't dabble. It's not worth, putting your clients or yourself at risk. But we do cover sort of incidental property management activities. So there's one more that I really want to dive into in more detail, which is claims related to properties or businesses you have a personal interest in. So this is selling your own property. And I know Aaron and I have had several discussions about this. It is far and away the most common question we get asked. Am I covered? Somebody told me I'm not covered if I'm selling my own property. That person has clearly been in the industry a long time, because there was a time when it wasn't, but is absolutely covered if you sell your own property, subject to meeting all the disclosure requirements in REBA 2002 and its regulations. So you'll know there's forms for it, and you have to disclose, even if you're just selling your home and you're not acting for yourself, you still have these disclosure requirements. Right after telling people they're covered, I will tell people, don't do it. Do not sell your own property. Make sure there's some other person who's a buffer between you as the seller and any prospective buyer and their agent. It's just a really good way to delineate your professional services from your personal seller position. When you blend the line, you create all manner of problems. And Tim, I'll open the floor because you can tell us about what these claims are actually like to defend from the insurer's perspective.
Yeah, I always say that, yes, you can do it, but as the claims guy, the lawyer on this, my advice to you is don't. Because I think that REBA 2002, you have, if you're the vendor, you have disclosure obligations anyway. But I think the disclosure obligations in the statute create potentially a greater duty. And certainly that's what other parties will claim, is that because you were the agent selling your own home, you have a greater duty to disclose anything that may affect the value of the property, which is way more than an ordinary vendor would have. So it's best to you just be the vendor, let someone else be the agent on it.
Yeah, there's this one line in the requirements says full disclosure of all facts within the registrant's knowledge that affect or will affect. So it's like this future tense thing that comes up. So the zoning changes come in and you haven't thought to tell the buyer about it or put it in the listing or so on, and it comes up and it restricts their use and they sue you. The thing that really sticks with me is the stories about really the judge, or the court in general will not look kindly upon you if you're both the professional and the vendor, because you own the property. You should know everything there is to know about it. And so it just puts you in a really bad position when you go to be defended.
Yeah, as far as I know, there are no judges in Ontario who were ever real estate agents, but there's a lot of judges in Ontario who think they were perfect real estate agents.
So that's the end of what's not covered. Anybody have any questions about the exclusions under the policy?
Yes, I'd just like maybe clarification on the deposits that you will be covering, I guess, in future, the deposit disputes. Can you just clarify?
Absolutely. So again, this is lead off information because I don't want to give you a presentation when I know full well the coverage is going to change, but nobody else knows that but you guys. One other brokerage and Reco.
We'll keep it a secret, okay?
This will be on YouTube in 2 days. Don't worry.
Oh no, it's fine. It's fine. It's totally fine. Anyways, the depository. So in cases where the brokerage is named in a suit where they're kind of caught in the middle and it's specific to the deposit. In the past, if it's purely about the deposit, so they're saying the claim is the $50,000 deposit. We used to be in a position where, per the policy, we had to deny that claim because there are no other covered allegations. Now we would be able to put counsel on it and provide essentially the service of managing that deposit dispute event on behalf of the brokerage. So
yeah, no, the fact of the matter is that If the only claim against the brokerage is for the deposit, the brokerage has no interest in the deposit. They're purely a stakeholder. So parties acting reasonably should be able to say, okay, well, you know what, you just hold on to it, or we'll agree to release it into one of the lawyer's trust account and we'll dismiss the action against you. And now we'll be able to put counsel in to negotiate that kind of thing for you.
Okay,
Now,
I see, because
when parties are unreasonable, then you can actually bring an application and have the money paid into court. And once it's paid into court, you're released from the action. But that, you know, that's all legal fees that you won't have now.
Okay, terrific, because currently if it has to be paid into court, we have to pay either a lawyer or someone to do that for us, because it's gotten far more complicated than it used to be years ago, right?
Right.
So now we would refer it to the insurer.
You would report it, and typically people will report these kinds of things, and then the program is stuck saying, well, we have to wait and see. You don't say anything to anybody, and they have to wait for a claim to come in. Now we can start actively managing it because it's included in coverage.
Okay, terrific. Thank you.
Welcome. So let's talk about consumer deposit. It's an insurance policy rather than other jurisdictions where it's done as a fund of last resort, which means that if your consumer, your customer or client has a deposit and it goes missing because, let's say, the other brokerage steals it, or you know, maybe somebody loses the check, that deposit can actually be a claim that's made. These are actually reported to Reco. So Reco actually managed the consumer deposit claims. They go through them to Claims Pro, and that's just part of their sort of regulatory work because they want to make sure that they're involved in protecting consumers. So that form will go from your client to Reco, and the client becomes the insured. It coverage is up to $100,000 per claim, but not more than $3 million for any occurrence, any single occurrence, essentially for all claims combined. And let's dive into that because it's also relevant for the next topic, which is commission protection. When we say per claim, this is now for stolen monies. So a claim in the context of consumer deposit, and in fact commission protection as well, is your claim for how much money was stolen. And it doesn't matter how many transactions that involves. What matters is the total quantum of money that was stolen as part of an occurrence. And typically occurrences are insolvent brokerages. So if we want to, you know, talk about brokerage insolvencies that we've had to deal with in the past, they've been sort of spectacular blowups where, you know, somebody in the brokerage has run off to Vegas with money. I'm not making that up. That's legitimately something that happened. And consumer deposits were missing and commissions were missing and so on. In that case, the consumers filed claims under the consumer deposit coverage and the insurer paid it and then took an assignment and then would go and try and seek recoveries on their behalf. But if a client had more than $100,000 of deposits at the brokerage, even though it was across multiple transactions, say they were buying 3 properties and they had $50,000 of deposit on each property, the maximum they could claim under the coverage is $100,000. So it says per claim, but you want to read it as per claimant, like per person. And it's not more than $3 million for all of those types of claims under consumer deposit combined. We've never had that happen for consumers. Not 3 million anyways. We have actually had one situation where deposits were in excess of $1 million, which was the old limit, just barely, but enough to tweak it. In that case, everybody's claim gets shrunk down pro rata. So we don't leave anybody out in the cold. It's not a first come, first serve basis. We have to bring in all the claims, assess what the limits available are, and then we might say, you know what, we have enough limits to pay 82 cents on the dollar. And then we'll make a claim payment on that basis. So that's how that works. So just to be clear, if your client wants to put more than $100,000 as a deposit, be thoughtful that, or mindful that the coverage that you have to protect their deposits is limited to $100,000. Now, another coverage that's unique to Reco that doesn't exist in any of the other provinces is social engineering fraud. Social engineering fraud is essentially like con artist scams. So let's say you have a client, their closing's coming up, or so they're going to pay a deposit, for example, and somebody gets in between you and your client and knows just enough about the transaction to talk like they're you or a representative of you, and they convince your client to send, say, $10,000 for miscellaneous closing costs. Like they'll just make up stuff. And this has happened before. Your client sends $10,000 willingly to a fraudulent account. In the olden days before this coverage enhancement, that wasn't covered because a registrant never had it. And just because you might have been impersonated doesn't mean that it triggers coverage. So we added this coverage in. So if your client sends up to $25,000 away because they were duped into doing it by a fraudulent third party, they can file a claim and have it covered. And there's no deductible for anything under consumer deposits. So consumers don't pay a deductible. So that for social engineering fraud is unique. It used to be $10,000 and now it's $25,000. So that's an increase from, I think, last year when we had that increase. So that's consumer deposit. And you look at the difference between consumer deposit and commission deposit protection. It's like the same slide. I had almost no work to make this slide. That was, again, that's insurance humor for you. That's as funny as we get. And essentially, it's the exact same coverage, except in this case, it's for your commission. So the most typical and spectacular event is a brokerage insolvency or brokerage bankruptcy. One of the ones you can read all about because it's a published court case is the redpin.com. Where in fact the brokerage had leveraged the commissions, all of the commissions, to borrow money from debtors. I think Firepower Debt GP was the one in the decision, right, Tim?
Yeah.
So they had actually leveraged them, and then essentially the debtors, the lender called in their loan, and all the commissions were scooped. And I've heard some registrants have called me and asked and said, why wouldn't you have covered them? I don't know where they got the impression we didn't cover them. We did. That said, our limit is $3 million. More commissions than that were impacted. And one of the things to be mindful of, again, is coverages up to $100,000 per claim. But again, it's not per transaction, even though that's how you file the forms. It's per claim, as in all monies impacted. So it's up to $100,000 for all the commissions that might be impacted. Now you might say, that's not enough. I wish it was more. Can I buy more? No, you can't. This coverage is completely unique to Reco. Other provinces have talked about trying to duplicate it. Nobody has. You guys are the only ones that have it. So it's $100,000 more per claim than any other province has. And we're pretty proud of it. It used to be 500,000 in the aggregate. Back in the day, around 2009, we increased it to $1 million. And about 3 or 4 years ago, we increased it to $3 million. We never had an event in terms of total claims within the per claim limit tally more than 3 million. So it's quite good. We also get the question, are larger brokerages, like very large brokerages, not getting less coverage as a result? The reality is slowly stealing away $3 million is not an easy job because there's more people in larger brokerages. I won't say it's universally the case, tend to have better controls in place and so on. So $3 million might not be the maximum amount for the world's largest real estate brokerage in Ontario, but typically larger brokerages have better controls, better accounting, more signatories, etc. So we haven't seen the $3 million be breached before. Again, you have social engineering fraud. If somebody dupes another brokerage into sending your commission money, so a cooperating brokerage into sending your commission monies to a fraudulent third party, you can make the same kind of claim here as you do, as you could if you were a consumer looking for a deposit. The deductible in this case is actually $250. Again, it's per claim, so it's not per transaction, it's per claim. So if you say you have, let's say you have 12 commissions owing of $10,000 each, you have a total of $120,000 of commissions. The coverage would cover you up to $100,000. So you wouldn't get the last 20, and you would pay one deductible of $250. So you would get $99,750. Any questions on this coverage? I'm going to add real quick, this policy covers your commissions, but it doesn't cover the timeliness of receiving your commissions. I will say that as unique as this coverage is, as difficult as the events are, because when a brokerage goes bankrupt or somebody is missing their commissions, it's very stressful for the people involved. We have to go through a very lengthy and detailed investigations process. We have to deal with the aggregate. It takes time to get all the claims in. We're often dealing with a number of other elements, like in the case of Firepower Debt GP, we had to wait till the courts had made a decision to see whether monies were actually sort of quote unquote stolen or misappropriated by the brokerage. So there's a lot of moving parts. So I want you to set in the back of your mind, if you ever have the unfortunate case, and I highly doubt you will because it doesn't happen very often, if you find yourself in this circumstance, please think about the fact that it will take a long time. It's months, not days. In some cases, it's taken years.
Yeah, with Redpin, we were actually fighting with the secured lender over entitlement to the commission, because we were trying to say that they were trust funds that belong to the salespeople rather than to the brokerage. And we lost that at the trial level, and then we fought it all the way up to the Court of Appeal. So that one took a while.
Yeah. So other complementary coverages you could look at as CGL. I would chat with your brokerage about that, about whether or not you have coverage through the brokerage or whether you need to seek it out for yourself. Cyber liability is not actually one that's, doesn't have big take up for registrants, because registrants typically have, diverse emails and so on, and don't have a centralized IT the same way a traditional company would. But cyber insurance is becoming a very, very hot topic. And in fact, I have it on the list, but if you wanted to go buy it today, it would be very hard to buy because the insurance market is in complete shambles right now, especially cyber. With COVID and everybody working from home, the cyber criminals have just gone gangbusters attacking organizations. So excess errors and omissions, if you find you want more than $1 million of coverage, you could buy more through the excess program. We have one. You could seek out another broker. Again, I'm never going to hard sell you. So I will tell you that claims over $1 million, I think in the last 21 years in the program, we may have had 5, I would say 5 out of 20 some odd thousand claims. We've had 5 go over $1 million. So this is not a burning issue for anybody. And a big part of that is the fact that Reco's negotiated the policy to be defense only limits. Damage only limits. So you're not eating away at your limit as we defend your files. So
now that said, when I started practice 30 years ago, $1 million house sales, occurred only in the toniest neighborhoods of towns. And now, I live in Toronto and I see, shacks that are going for $1 million. So it may be that we're going to see more $1 million plus claims. So if you have an active practice, it might be worth looking into getting excess coverage. I don't think it's particularly expensive, right?
You'll realize how good a deal the Reco policy is, because if you wanted to buy it just for yourself, the minimum premium with an insurer is $750 for the year. So it's versus the Reco policy, which I think is $475 or something, even including Reco's admin and so on. So it's not inexpensive comparatively speaking, but for an additional dedicated $1 million of coverage, $750 isn't a tremendous amount. And it may be that through your brokerage, you may already have excess. Typically, it's purchased at the brokerage level, not the individual level. And then crime and property management. We talked about property management. Crime is really more for brokerages than it is for individuals. It's for employee theft and those kinds of things. But this is, really the purpose of this slide, to say the Reco policy does not cover everything. It covers professional liability. So if you feel like, oh, I've got the Reco policy, I'm covered for everything, That's not true, because if somebody slips and falls at your, open house or so on, it may not be a professional liability claim. Just because it happened while you were being a professional doesn't mean the claim is professional in nature. If somebody's just a klutz and falls downstairs, that's not because you told them that the bones of the house were good. They just clumsy, and they'll probably sue the homeowner, and the homeowner's insurer will sue you and the brokerage, and you may not have coverage unless you have coverage for general liability, because it won't trigger our policy. So let's talk about the top 5 covered causes of loss. This is quite topical. We talk about this in the annual report, but we don't give these kinds of details. The top 5 covered causes of loss, sort of in the last 5 years or so, have been incomplete sale, property description, foundations, basements, financial or mortgage related, and property value. And I'll dig into those. So about 12% of the claims are incomplete sale claims. So where the sale doesn't go through because either the buyer or the seller just does not want to complete it. Those are very messy. They're quite common, especially when there are big market changes. So if you'll recall, back in April of 2017, we had a significant market adjustment, and that triggered a lot of people to not want to complete their purchase, because all of a sudden prices had dropped dramatically almost overnight. So incomplete sale has snuck up this list a bit in terms of overall portion of claims, and the average cost to over and above the deductible paid for us to cover those is $14,000. Keep in mind, some are a lot more than that, and some are a fair bit less than that, but on average, that's what they cost the program. Property description is, say, a square footage issue, where you kind of tell somebody, or put in the listing, it's 2,400 square feet, and then the consumer says, you know what, it's actually only 2,200 square feet. I had it measured. You owe me 10% of my money back because the house is 10% smaller. At which point we defend quite vigorously and say, you went to the house, you saw the size of the rooms, nothing's really changed. You paid market value for it. And that's why those, I think, Tim, correct me if I'm wrong, why those tend to be a little bit cheaper for us to deal with.
Well, except we did recently have a very, very disappointing court decision and a court of appeal decision, which was exactly along those lines. And that's why I tell everybody to be cautious about stating square footage and so forth, because we had a consumer, weren't buying from plans. They actually saw the place twice. How big is it? Well, it's this big. Take a look around. And court unfortunately agreed with him that, well, there was a misstatement in the listing, and therefore there were damages that grew out of that. We took that to the Court of Appeal as well, and we lost on it. So stating square footage, I would caution everybody about.
Could I ask a question as to the advice you'd give registrants? Because I know in the GTA, TREB does a pretty good job of saying that you don't need to state the actual square footage. They give a range. And then sometimes the agent will take it upon them and says it's approximately 2,500 square feet. Is there any do's and don'ts when it comes to making it other than just don't put it at all? I mean, what's your suggestion?
Well, I would put it on a proviso that I like the idea of the range, or putting in that it's been calculated basically just by taking outside measurements and doing the simple geometry of area, because when you get into commercial properties and so forth, as there's actually quantity surveyors that go in to calculate square footage, because you don't count access shafts and stairwells and things like that. You don't want to get into that. I think you want to basically say, this is very general. This is based on the outside dimensions, or it's in this range. Frankly, I couldn't believe that we lost where a guy had been in the place twice. Like, it's as big as it looks. Like, it's not, if you're a Doctor Who fan, it's not the TARDIS. It's not bigger on the inside. It's as big as it looks.
Not to mention buyer beware in Ontario.
Yeah.
And I know the Toronto Real Estate Board is fairly general, but the Barrie Board, actually asks for specifics. And at one point we were using MPAC, and now MPAC is saying we're not going to, don't use us, we're not guaranteeing our measurements.
Yeah, we're not reliable. Yeah. Yeah.
So what do we do
That's
when we're on
reassuring.
the Berry
Yeah.
board?
Yeah.
Just, I think Tim, almost always the answer to most questions about how to manage the situation is just document. Say what the source is, say where it came from, say how certain it is, just document and never speak about something as a fact unless it is truly a fact and you did it yourself.
And don't take it from a previous listing.
Definitely.
Yeah.
Measure
Yeah,
yourself.
Yeah, be very careful about duping previous listings, not just on square footage, but on anything. I had a very contentious one where the property had been listed, I guess, about through 3 listings, and they just picked up what the tax was from prior, and it had changed. And that was a $5 million property, so the taxes were significant.
And the property that went to court, the difference between the actual measurement and what was reported as the measurement, how big a difference was there?
I can't remember, but it wasn't significant.
Okay.
Put it this way, both I and counsel were incensed by the decision. Because it's one thing, if you're buying, like, again, if it's a builder property or something, you got plans and you can't really judge something by plans. But when you've actually stood in the place, it's this big. And somehow we couldn't get the court to agree with us on that. It's this big. Well, he's a first-time home buyer, so he's been in houses before. This is his first time indoors. So anyway, don't get me started.
Well, property, I know we're now running a little over time. Hopefully everybody's at least enjoying the discussion and we'll stick around for the question and answer at the end. We're at the last sort of 3 or 4 slides, so don't feel like it's going to carry on much longer for this portion before you can ask questions broadly or whatever you have on your mind. I'll just finish out this slide by saying property description is sometimes things like we've had claims where somebody said, well, you said there was a kitchen, there's no kitchen. Literally, there's no kitchen in the house, but they'd been there. They must have seen there was no kitchen, but they sued because there was no kitchen. We've also had people accidentally sell the wrong apartment, like the wrong condo. this different unit, because they showed up on a day and they had a universal key and they sold the wrong place. So property description is kind of one of the top ones. Foundations are always tricky, really, especially around situations where everybody's going in with firm offers. Make sure you document the dickens out of any of your offers to make sure that your client has acknowledged that you are not getting a home inspection. Make sure they understand what that means. I know there are standard forms around it. Just whatever markings you can make them make on a piece of paper to say that they know they didn't get that done, because foundations do have a tendency to leak and they cause a lot of claims. Financial and mortgage is sort of hand in hand with incomplete sale. Back in April of 2017, when the market changed, a lot of lenders all of a sudden reassessed whether or not they wanted to lend the money on the new value about a month or 2 later, and said they couldn't. And so if financial reasons or mortgage reasons are why you can't close, that's where those kinds of claims come about. And I'm generalizing. There are all sorts of other weird and wacky mortgage situations that cause claims, vendor take back and that kind of thing. Property value is where somebody thinks the value should have been something other than what they bought or sold it for. They come up again around times like where there are big changes, or when somebody's assembling land and going around trying to sort of trick people into selling their property well under value because they're trying to assemble land. We've seen that. Tim, I think we saw that just recently, did we not?
Yeah. Basically, if somebody knows that they're part of a land assembly, they can hold out for a higher price. So we've had cases where we've had claims against agents for not disclosing the identity of the purchaser, or where they're acting on both sides of the transaction.
And to be honest, sometimes somebody, an agent, is buying, again, it's the other half of buying property, or sorry, selling your own property. Sometimes people are buying their own property, and we've had agents who get caught in situations where they buy property and they pay undervalue. They sort of leverage their experience and so on to pay undervalue, and those can cause claims too. So property value is a big one. Documents where you get your values from, present them to your clients, make sure you have that stuff saved somewhere so that you can point to how you came up with values. Document, document, document. You'll hear the word document all the time if you call us and ask a question about how do I avoid this situation. And again, you can reduce the likelihood of something coming up. The documentation means that if it does come up, that you'll be able to hold ground better. And you can't stop, as Tim says, can't stop people from suing you. We can only defend you. So this is an updated chart to show you sort of, as Tim had alluded to earlier, how values have changed. Every once in a while, we get a registrant who calls and said, I remember when the policy was $105 and now it's $400 or something. First of all, when Reco set up the program back in 2000, they got a sweetheart deal. We knew it because we helped them get it. They got a really, really good deal. So it was probably well underpriced back then to begin with, but also you can see the proportion of transactions, like claims transactions that related to properties that were under $150,000 back in 2000 was an awful lot bigger than it is today. And the reality is that, we have a vast majority of our files, as you can imagine, relate to properties that are over 500,000, whereas in the past it was maybe 20% of our files. So the way in which property values have changed over the last 20 years is a major driver of how claim values are going up over time. The cost to defend, people are much more likely to spend big money on lawyers when the house is worth $1 million than when it's worth $150,000. So the transactions have gone up in value, and so have the claims. And the price of the insurance has gone up to match. So if you want to sort of mark in your calendar what the Reco premium will be 10 years from now, you can use an inflationary factor of about 4.5%, because that has, we have enough stats to tell you that's roughly what it'll go up by. We fight and fight and fight to, keep it the best possible price. But over time, that's the inflation of the cost of managing the program. And the program is priced to match the cost of providing the coverage, not some whim of an insurer. It's actually sort of built on first principles of the cost of defending files and paying claims. And then this last section of the presentation is really just covering off some of the sort of things people say. I've been to many presentations where people accuse new realtors as being the cause of all the claims. We get the big claims only happen in downtown Toronto. We get that a lot. And we get all the insurer does is try and deny claims. These are the three most common gripes I get from folks that I like to get the opportunity to dispel. So first of all, your likelihood of having a claim as an individual goes up the longer you've been in the industry. And these are based on the stats we have available. I won't tell you it's a perfect analysis, but it's the best of data we have. And you are significantly more likely to have a claim if you've got 15 to 25 years experience than if you have 0 to 5. Now, before you throw me out of the room, let me explain that. The reality is if you've got 15 to 25 years of experience, you're the person people trust to sell, complicated properties, to do more deals. If you've stuck around that long, you've probably got a lot of experience. You've built a big network of clients. So as an individual professional, you're more likely to have a claim because you're doing more deals. They're probably more complicated. They probably have more on the line. And simply by being more visible, you're going to have more claims than somebody who has 0 experience. How many deals does somebody who just finished the Reco education course have in the works? 0. So they're going to have 0 claims with 0 deals going on until they build a roster of clients.
And the older you get, the more likely you are to be the leader on something or to be the solo on something.
And this is Tim. Tim used to work for many years defending lawyers as part of the Law Pro program. And Tim, you found this to be exactly the same in the legal industry as well.
Yeah. Basically, with lawyers, my experience was a lawyer 20 to 25 years out was more likely to have a claim, not because they were worse lawyers, but simply because they were the senior partner on something. They just did more things. They did bigger things. It's basically statistics at that point.
Yeah.
I frequently say to people when they said, I've done this for 40 years and I've never had a claim, I said, well, you beat the odds, because usually again, too, a claim is when somebody says you did something wrong, not when you did something wrong. And you beat the odds if you've gotten through 40 years and nobody's ever said that to you.
Agreed. So that's our first Mythbusters myth, the busted. That's not to say that we don't have lots of claims from people with 5 years of experience or less. It's just that they're not the most likely to have a claim as an individual. Big claims only happen in the big city. This is a plot of some of our biggest claims. As you can see, they are not all in Toronto, as some people outside of Toronto might like to believe. We have some well outside of Kingston, dotted around Ottawa, up in Sault Ste. Marie. Claims happen pretty much anywhere. Farm claims are big. They can be very expensive. It's not just houses downtown with, 150-year-old foundations that are clearly going to be crumbling. Claims can come from pretty much anything. So don't feel like you can rest easy because you're not necessarily doing certain size properties. Big claims can come from anywhere. All the insurer does is try and deny claims. I ran this on data from 2000 to 2015, about 5 years ago when I first did this presentation. And it was 8 out of every 100 claims. And now it's actually, I said roughly 7 out of every 100 claims. It's actually 6.7. So we're denying even fewer claims than we used to deny. And you can see the reasons why we might deny claims. The first one is deposit dispute. So look at how many there are. Those will actually all be covered. So this number is going to drop once we stop having that exclusion. Commission disputes will still be there. So if you're pursuing a client, you're basically asking somebody to sue you back. We won't cover you for that. And then no covered allegations means it's not a professional liability claim. It's either general liability or some personal matter or whatever the case might be. Those are things that are truly not covered. And then you've got the residual stuff like agent interest. So there are cases where we will deny a claim on the basis that you were the seller and not the professional, or you didn't actually disclose that you were the professional. And you can see that tiny, tiny sliver. I'm pointing at a chart. You can't see this tiny sliver here of circumstances where we would deny. So this is not a rampant issue within the program where you file a claim and we look for ways to deny, right, Tim?
Right. Well, actually, because we're a compulsory insurer, you don't have a choice where you buy. I think it's our job to try to find a way to cover you, so that if we say, sorry, it's not covered, we take that pretty seriously.
It's not something we try on for size in the hopes that you'll just go away and deal with it yourself. We want to find coverage for you.
Thank you so much for watching. If you like our video, please hit the like button, the subscribe, and even the little bell to get notifications, just so you can stay in touch and watch more of these great videos.